Building a Plan for Accelerated Business Growth in 2019. Today's webinar is sponsored by CoreCentric, and I'm Mark Brousseau, your speaker for today. A few housekeeping items before we get started. If you have any questions during today's webinar, use the question and answer box on your screen to send them to us electronically, and we'll answer them at the conclusion of today's webinar. If we don't have time to answer your question during the webinar, someone from CoreCentric will respond to you directly afterwards. Additionally, today's webinar will be recorded. You'll receive a link to the on-demand version of the webinar at the conclusion of the webinar. So as 2019 starts, businesses are cautiously optimistic about the economic environment. A lot of businesses have now prioritized business growth. This is a big change from the past several years where many businesses were cautious, cutting costs, and reining in spending. Well, now businesses believe that they're confident, that they're buoyant, that they're going to grow the business. The question is how they can do it. And this is where accounts payable comes in. Senior finance executives are giddy about the opportunities to lever accounts payable to help them drive business growth, and for good reason. When automated, accounts payable can deliver significant strategic benefits to the business, the kind of benefits that can help you drive revenues, increase net profit margins, and find the funds to invest in R&D that can innovate and help you stand out from the competition. And one way to do that is through electronic payments. And that's what we're here to talk about today. We're going to take a look at how it is that businesses currently pay their suppliers. We'll show you the benefits of electronic payments and why it is that so many businesses have prioritized electronic payments in 2019. Then we're going to lay out a 5-step action plan for how it is you can ensure the success of your electronic payments program. And I'm also going to give you some tips for how to select the right partner. Before we do all that, we wanted to do a level set to show you where it is we stand today when it comes to payments to suppliers. We all know that paying our suppliers is a time-consuming affair. In fact, if you're using paper checks to pay the majority of your suppliers, chances are you're suffering from high costs, high errors, poor visibility, and frustration among your internal staff as well as your suppliers. We know that supplier payments are a time-consuming affair. You have to set up the supplier, you have to gather their payment details, you have to update it, you have to get their tax forms. Once that invoice comes in, that kicks off a whole nother round of manual processes. You have to open mail, verify invoices, key invoice data, track down purchasers, send the invoice to the purchaser. The list goes on. And then once that approved invoice comes back into your operation, what do? You key it into your ERP system. And then at some point, you're going to go ahead and generate that payment to your supplier. And until recently, most of those payments were made via paper check. That meant you printed out the check, you folded it, you stuffed it in an envelope, you fixed the postage, you put it in the mail, then you manually reconciled the payment with the invoice, and you dealt with the inevitable phone calls and emails from suppliers about, where is my payment? It's in the mail, as we always used to say. All of this makes supplier payments a burden to the organization. And this is the reason that in 2019, accounts payable practitioners say that payments automation, not invoice automation, is their #1 priority. They want to complete the last mile of accounts payable automation. Too often, businesses focus on those steps around invoice approval, processing, and posting. And there's good reasons for that. After all, it is the most manual and labor-intensive task in an F&A department. But you can't turn your back on the payments piece. After all, in its own right, in a paper-based and manual environment, it costs a lot. It creates a lot of inefficiencies, and it leaves you open to fraud. And this is why businesses want to complete the last mile. But something else is going on. Businesses also recognize that payments automation can deliver some big-time strategic benefits to the organization. So against this backdrop, paper checks are finally losing their grip. Depending on who your favorite trade association is, you'll see different stats on where we stand with paper checks. According to the Institute of Finance and Management, my favorite trade association, today businesses are paying roughly 38% of their supplier payments via a paper check. Now that's a far cry from just a few years ago where it stood at 60%. And a few years earlier, well, it was in the 80s. Now, that number needs a little bit of context because we know that the smaller you are, the higher percentage of paper checks you're still cutting. So among small and mid-sized businesses, it's typically around 60 to 70%, and it's not uncommon to see small businesses that are paying all of their suppliers with a paper check still today, not even using ACH. Well, paper checks are finally losing their grip on how it is businesses pay their suppliers. In fact, over the next 3 years, businesses anticipate that ACH volume will outstrip their paper check volume, as you can see on this slide. What's more, virtual cards, these plasticless 16-digit card programs tied to a specific transaction, these are going to account for nearly as many supplier payments as paper checks. And you can see the P-card and wire transfer, well, they're not going away. They're going to hold steady and they're going to have their place in the payment mix. But the big story here is that paper checks are finally sliding away. Now, don't get carried away. They're not going to disappear. 16% of all small businesses tell us that they will never, N-E-V-E-R, never accept electronic payments. Now, of course, opinions change, but there's certainly got to be some holdouts. But directionally, well, we know 80% of remittance departments, well, they want to increase the percentage of electronic payments they receive. So they're going to be knocking on your door asking for them. And why do we believe these expectations today? I mean, after all, we've been talking about a checkless society for seemingly forever. Well, because 70% of businesses have a strategy in place to increase their percentage of electronic payments. Why is it that businesses are so eager to send and receive electronic payments? Well, for buyers, they achieve significant cost savings. Checks cost 30 times more than an electronic payment. What's more, compared to paper checks, electronic payments are seamless. They're frictionless. They can be sent almost instantly with a click of a key or a mouse. What's more, electronic payments create revenue opportunities that simply are unavailable in a check environment. We're going to talk about that more a little bit later. And businesses also know that sending electronic payments instead of paper checks slams the door shut on fraud. Checks are responsible for more than 10 times as much fraud as ACH transactions, an even higher percentage compared to card transactions. Simply too risky to pay your suppliers with a paper check. Suppliers have something to gain, though, here too. They get secure, predictable payments. They know when the money is going to hit their bank. They get self-service reporting, so it's a snap for them to reconcile. And they can still get robust remittance data. What's more, in some cases, suppliers will get paid faster if they're willing to accept an electronic payment versus a paper check. What's more, when it comes to buyers, electronic payments fit nicely with their top priorities for improvement. AP departments tell us they're looking for ways to speed processing. Well, electronic payments can be generated through a single file output from an ERP and sent almost effortlessly. No paper folding, shuffling, stuffing, fixing stamps, none of that nonsense. They're also much cheaper, as we just discussed. And with electronic payments combined with an AP automation solution, far more accurate. You're going to have fewer duplicate payments. And what's more is for buyers, you get visibility across the payment life cycle at your fingertips. But perhaps the most compelling thing about electronic payments, the thing that helps drive business growth, is that while there's compelling benefits to invoice automation, when you combine invoice automation with an electronic payments program that's tied to working capital optimization, things like cashback rebates, early payment discounts, and standardizing payment terms, you can achieve 5 times the economic benefit of just automating your invoice processing on its own. This is the kind of stuff that not only offsets the overhead of your AP department, it transforms your department into a profit center and puts you in a position to deliver value back to the enterprise, regardless of how big you are. How do you do that exactly? Well, one way to do it is through card rebates. Virtual cards provide the buyer with opportunities to earn a percentage of the interchange fee back as a cashback rebate. These rebates can add up fast. It's not uncommon to hear businesses making tens of thousands of dollars a year in rebates, hundreds of thousands of dollars in rebates, or even large organizations that are achieving millions of dollars in rebates. You better believe that that's going to help offset the costs of your AP department. But there's more. Electronic payments also streamline the procure-to-pay process, opening the door to more opportunities to capture early payment discounts. And when you normalize your payment terms along with your electronic payments program, now suppliers are going to be incentivized to accept electronic payments. And in some cases, those can be tied to an early payment discount. We know that 80%, yes, 80% of suppliers are willing to exchange a discount on the invoice due amount for earlier payment. Hey, they've got cash flow issues too. And if you do business with a lot of small and mid-sized suppliers, chances are they're eager to give you those discounts to help smooth out their cash flow. Electronic payments helps you capture those early payment discounts. In many cases, organizations are capturing big bucks. What's more, electronic payments give you an opportunity to extend your DPO, days payable outstanding, the measure of how long it takes your business to pay its suppliers. We know that if you pay your suppliers too quickly, you're basically giving them interest-free financing. Well, financing that they could probably use to buy goods and services from someone else. If you pay them too slowly, well, then you're going to have a different issue. Suppliers are probably going to give you pushback, raise your cost of goods. What you want to do is have levers so you can control DPO carefully, and that's what CFOs plan to do. And electronic payments give you a tool in your tool bag to help you do just that. If you use certain types of card programs, you can instantly extend your DPO without changing your payment terms to a single supplier. That's right. The way that happens is you basically don't have to pay back those expenses until you get your bank statement. In general, that's about 22 days. But many businesses are also extending their payment terms as part of their electronic payments initiatives. And what they're doing is they're telling their suppliers that if you demand a paper check from us, it's going to take you 60 days, for instance, to receive that payment. But if you're willing to receive an ACH transaction and give us an early payment discount, well, now maybe it's only 20 days. If you're willing to accept a virtual card payment, maybe it's only 10 days or even less. And for suppliers, don't think they won't accept those different options. We spoke of those early payment discount opportunities that are facilitated by electronic payments. What we know is that 70% of CFOs want more opportunities to capture early payment discounts. That doesn't mean they're going to take advantage of all of them. What it means is that when the cash flow allows, they want more opportunities to seize them. And we know that companies using P2P automation, such as electronic payments, are 7 times more likely to capture early payment discounts than their peers with little or no automation, those folks cutting paper checks and manually processing paper invoices. So this is what's got businesses excited. This is what has them taking a holistic approach to payments. This is a big cry from a few years back. Years ago, of course, the lion's share of payments were made with just paper checks. Then maybe the bank came knocking on your door and said, wouldn't it be a good idea to pay your suppliers with ACH transactions? ACH, how we pay most of our payroll, our employees, and maybe even refund our T&E. And then card programs came to the fore, and businesses started to look at using different options. The mistake most businesses made is they saw it as an either-or proposition. Either they paid suppliers with ACH, or they tried to pay all their suppliers with card. And banks were guilty of this because some banks pushed them in this direction in order to sell some of the products they had on the shelf. And yes, some vendors were guilty of this too because they only had the technology to support, say, virtual cards. The better approach, the one the businesses are coming around to, is to do a holistic approach. So they can meet the needs of buyers as well as meet the unique needs of suppliers. A take it or leave it approach is not ideal when it comes to payments. And virtual cards should be part of your payments mix. As we suggested, they're electronically delivered. They're paid fast. They provide rich remittance detail to the supplier that makes reconciliation easy. They're more secure than paper checks and even more secure than ACH. And they leverage the invoice approval process. So unlike P-cards, you know exactly what purchases are desired to make before they're made. So it's not trying to put the genie back in the bottle. And yes, virtual cards offer lucrative cashback rebate opportunities for the buyer. So why isn't everybody rushing to electronic payments? Why haven't we done away with checks once and for all? Well, about a quarter of AP departments tell us that they lack department resources to support electronic payments initiatives. 1 in 5 tell us they have concerns about supplier adoption. 8% of AP departments identify a lack of senior management support, and 7% have no strategy. The good news is that using a holistic automated solution, such as the one from CoreCentric, addresses these challenges head on. It's delivered via the cloud, so there's no big capital outlay, no big software implementation, no huge maintenance deal. It is readily available to suppliers. It fulfills their need for multiple payment options with multiple payment timing. It appeals to senior management because it delivers strategic benefits that help them drive the strategic objectives of the business. And what's more is it can be the basis for moving to electronic payments. So the question is, how is it that we actually roll out a successful payment automation plan? Well, the first step is to take a hard look at your spend file. You want to understand your current relationship with each supplier, how it is you're paying them. What's your current payment terms with them? Whether you've received any requests from each supplier for early payment, whether you know that they accept different payment types, whether they are a high volume supplier or a low volume supplier, an infrequent biller or a frequent biller, and what the average transaction amount would be. What you want to do here is work with your technology provider to identify the types of suppliers who would be likely candidates for each of those different payment types we discussed earlier. For instance, small and mid-sized business, well, they might be a better fit for card transactions. Maybe you know through your technology vendors analysis that certain large suppliers already accept ACH or card transactions. Maybe you have certain suppliers who've been beating down your door to pay them early. Well, these might be good candidates for ACH tied to an early payment discount. There's lots of scenarios here, but the key thing is you want to evaluate your entire list and segment it and create a strategy for approaching these suppliers based on what you believe they will be most likely candidates for. If this sounds onerous, it is. You can't do this by yourself. You need to partner with a technology provider. And for God's sake, don't partner with one that's going to do these hit and run deals where they come in for 3 months, help you out, and they leave you holding the bag no matter what at the end of 3 months. These are the folks who hit a low ceiling on their penetration rates and never get anywhere with your program. You want a partner who's going to be in it for the long haul, who has a program that's going to help you onboard as many suppliers across the segments as possible. You want to choose your partner carefully here. Once you've completed your spend file analysis, now we're going to try to enroll our suppliers. You're going to contact them via print mail, email, phone call to let them know that you're beginning an electronic payments program and that they're a good candidate for one of your payments products. You want to educate them on the benefits to them. You don't want to make it sound like you're forcing something down their throat. You would explain what benefits they receive. Maybe it's earlier payment. Maybe it's early payment discount opportunities. Maybe it's better remittance data. And then you're going to enroll them. Here again, for time-strapped AP departments, this can seem like a scary proposition. But again, you can leverage your technology provider to offer their services to reach out to your suppliers. You can work with your technology provider to develop that talk track, to identify which suppliers you might not want them to contact. You're going to handle yourself because they're very sensitive. To approaches to use for different suppliers. They'll have the expertise, the stock copy you could use for emails and communications. You're going to help them develop the narrative that their call center employees will use, and this will all help drive higher enrollment. It's not unusual for organizations to achieve 30% adoption of virtual card transactions, for instance. But what I hear is that many folks who use a vendor with a weak or no supplier enrollment services is sort of stuck in the low teens. This means they're leaving lots of money on the table and they're spending lots of money they otherwise wouldn't need to spend on paper checks. Once you start enrolling your suppliers, now it's time to pay them. I want you to look for a solution that provides a holistic approach to electronic payments. ACH, check, wire, and card. And yes, I said check, because there are some suppliers who check is absolutely the right answer. Maybe it's a one-time supplier. Maybe it's someone who you infrequently do business with. Maybe it's a small business who's just kicking and screaming and they can't accept electronic payments. Look for a technology provider who can take your payment file and manage those paper checks for you so that they can be offloaded from your business. But you want to make sure you have a partner that can take a single file out of your ERP system and affect those payments by themselves. The next step is to make sure you have a strategy for supporting and maintaining your electronic payments program. Let's face it, your needs change, and so do your suppliers' needs. So you need to make sure that your technology provider offers you support, but also has support for your suppliers. So when they ask those questions about how to get at remittance detail, how to change from ACH to card transactions, how to manage the fact that their bank changed, you don't want to be fielding all those calls. You want your technology provider to be fielding all those calls. You want to also make sure that your technology provider can support your bank and your e-invoicing network or ERP. You want to make sure that they can provide you as well as your supplier with technical support. And you want to make sure that they're investing in the product so that for the long haul, you can have a solution that meets your needs. We all know the payment space is changing fast, and you want to make sure your product can adapt with it. Finally, you want to make sure you have a strategy for ongoing enrollment. We all know that suppliers churn frequently in many businesses. And yet, when we look at this electronic payments enrollment programs that most businesses use, it's kind of a defined period of time. They stop after 3 or 6 or 9 months and that's it. What you want to do is regularly review your supplier's spend file for new opportunities to convert suppliers to electronic payments. Maybe you have a new supplier. Maybe you have a new supplier contact. So that old coot who wouldn't take ACH or card, maybe they've retired, and you have a millennial in the job who understands the benefits of electronic payments. What's more, maybe your payment terms have changed with a particular supplier, and now they have a little more incentive to move to ACH or even card. The key takeaway here is don't stop enrolling. That reminds me of an old song from the 80s I really like, but that's all another story. You want to keep enrolling your suppliers, and you want to have a strategy to do it. And you probably want to lean on your technology provider here as well. So then this begs the question, how is it we should select the right automation partner for our electronic payments program? Well, first, you want to make sure their platform has the key features and functionality. Make sure it has a holistic payments approach. Make sure it offers the reporting that you need. Make sure it allows you to take a single file from your ERP. So you're not trying to parse data, log into multiple portals. eGads don't do any of that stuff. What's more, you want to make sure you have a technology partner with those services I was talking about, whether it's onboarding your suppliers or supporting them. You want to make sure you're not left holding the bag. You want to make sure that your supplier is going to help you achieve simplified and automated financial flows. This doesn't need to be complex for you or for your buyers. You also want to make sure that their platform makes it easy to adopt and easy to train users, whether they're in your shop or your supplier's shop. And folks, for goodness sake, you have too much riding on your payments to suppliers to choose a startup or fly-by-night vendor. Choose a reputable, established technology provider, one that has a track record in the accounts payable space and understands how to work with buyers as well as suppliers. Venture capital is great, but we don't want to be somebody's petri dish for their new electronic payments program. As I said, you want to make sure your vendor can offer you the layered services on top of their technology, whether that's enrollment, support, or those working capital opportunities. This should be job one, especially if you want to do what today's webinar is setting out to do, achieving business growth through electronic payments. So what's the message I want to leave you with today? Well, first, payments automation is the #1 priority for AP leaders in 2019. If it's not near the top of your list and you're still cutting paper checks, well, you're going to be falling behind your peers. And we know in today's competitive economy, that's not a place you want to be. Second, there is no question that electronic payments provide benefits to buyers and suppliers alike. If someone tries to convince you that suppliers don't benefit or they won't go for this, you tell them that's nonsense. Mark Brousseau said they're not right. There's 5 steps you need to follow to achieve a successful rollout of your electronic payments plan. It all starts with supplier spend analysis, and it ends with ensuring ongoing enrollment. Don't skip any of the steps. If you do, you're going to find yourself with a low adoption rate, with unnecessarily high costs, not optimal benefits in terms of rebates, in terms of discounts, in terms of DPO. If you follow the 5 steps we've laid out today, you're going to achieve big benefits in your AP department. Benefits that go well beyond your walls, that help your business achieve the growth it's looking for in 2019. And this, ladies and gentlemen, is what gets CFOs really, really excited about electronic payments. So I've got you fired up. Now it's time for you to spread the word. Run down the hall, not yet, and tell the CFO what's in it for them. I want you to show CFOs how the improvements in electronic payments are going to increase efficiency and effectiveness. And I want you to include cost savings, DPO, rebates, and new discounts captured as part of your analysis. And I want you to create a pro forma that details the comparative return on investment if you do this. If you take the time to calculate those savings and those benefits, you're going to find that not only will electronic payments pay for themselves, they'll likely pay for all of your AP automation initiatives and maybe all of the overhead in your AP department. Now, don't take my word for it. My friends at CoreCentric are willing to show you how real-world companies just like yours are actually doing what I just said. The trick is, you got to give them a call. Contact them via the number on your screen, or you could even send them an email if you want to be all technology-driven. But give them a call, send them an email, and find out how you can achieve business growth this year through electronic payments automation.